Hello everyone, this is Jordan. Welcome back to the Daily Gold YouTube channel, and if you're new here, welcome to the Daily Gold YouTube channel. This video is being recorded on the late afternoon of Monday, March 10th, 2025. And yes, it's Monday, so it's time for Macro Mondays. And this is one of the most significant developments for gold and precious metals in a really, really long time, because the number one indicator for gold and the rest of precious metals is turning bullish for the first time in almost 25 years. And that is gold breaking out against the stock market, or the stock market breaking down against gold. And at the same time, gold against the 60-40 portfolio, that is on its way to breaking out and accelerating out of a 10-year base. Again, this is the first time in nearly a quarter century. This has only happened 3 other times in the last century. This is extremely significant. So without further ado, let's talk about it and let's get to the charts. So first thing is we have the S&P 500 here. This is a weekly line chart. The moving average is the equivalent to the 40-month moving average. Now, I use weekly charts because there's a few more data points in the monthly, so it gives us more to see. We can see some of the wiggles and wags and that sort of thing. And so as far as the secular trend, when is it over? Well, this indicator, the 40-month moving average, when the market falls below it, and convincingly so, that signals a new secular bear market. And so it happened a year after the peak here, here, and here. And so that's what these vertical lines signify. And so because there is a lag, the market can peak and it can be down only a little bit, and nobody will think that we just saw a secular top. So that is something that we're at risk of very, if not now or very soon. But I'll get a little bit more into that. This chart is more important. This is the S&P divided by gold. So we have the lines here when it's a confirmed new secular bear. We're also looking at the S&P against gold. Now, here we are. We can see this ratio, or the stocks against gold, it lost the moving average right around here at the same time. Now, this ratio did not break down with respect to stocks against gold, because remember, we were on the gold standard until 71. So gold was artificially cheap. And of course, we're on the gold standard here as well. But I'm going to come back to that in a second here. But first, so we see this breakdown here. This is very similar to what's just happened, or we can see this is breaking down in favor of gold. But as I wrote about in my book, in the 1960s, gold stocks were gold. Basically, the gold stocks in the 1960s, that was the gold of today, or GLD. And so if we look at the S&P divided by the gold stocks, this actually peaked in the early 60s. It didn't really break down convincingly until 1964 here, or 1965. And in late 64, the gold stocks broke out of a 28-year-long base. So based on this chart, I'm saying that what we're seeing right here is similar to what happened here. And again, this breakout in the gold stocks is very similar to gold breaking out above 2100. So based on this, you had the breakout here, the S&P, and so this was 65. You had the Dow peak in 66, the S&P peak in 68. So it's possible that the secular peak in the S&P 500 and U.S. stocks, it may not be here. It may be in a year or 2 years after this. But that being said, for all intents and purposes, the market has peaked in real terms against gold and precious metals. I mean, if you look at this chart right here, and again, this actually peaked at the very tail end of 2021, peaked in favor of gold, and now it's breaking down here. So I hope this chart here and this chart as well, they provide some historical context with respect to secular peaks in the stock market and gold beginning a new secular bull market. But I'll get to that in another chart. And so this chart, we're just zooming in on the S&P against gold. And we can see here Again, this is a weekly line chart. Now, we have the 40-month moving average in blue. This is the 80-month moving average in red. And so I'll come back to this in a moment, the 80-month moving average. But the 40-month moving average, that's really my best signal. So we have this line right here. And so the market broke down here. And then this is when you can tell it's over, when it's coming down here. It's a little bit more difficult around the new millennium because you had the breakdown here. And okay, well, that makes sense. I mean, it lost the 40-month moving average here, but there was still a little bit to go to the 80-month here. Same thing here, broke down, still a little bit of room to go before it lost the 80-month moving average. But look where we are here and now. So you can see the 40-month and the 80-month. We have broken down and we've already lost the 80-month moving average. So if you think about, we lost the 80-month moving average here, we lost the 80-month here. So we've lost both moving averages. And if we look at the last, I'd have to zoom in, is at the last 6 months or so, but this ratio, it failed to reclaim the 20-month. Now it's turning down, or excuse me, the 40-month. So the 40-month is turning down. And again, it lost both moving averages. It lost the 80-month. And yes, it's broken down below here. This is a new 4-year low. I mean, this is significant. This is a secular peak as far as stock market against gold. And it could bounce back up a little bit, rally for a little bit. That's always possible, and then fail again and then have an even bigger decline. But this is done. I mean, this is good night for the stock market with respect to gold. You want to be in gold now instead of the stock market. I mean, that's just a fact. That's what this chart is telling us. And at the end of the month, I'll update gold against the 60-40 because that, that is probably making a similar move, but we only track that on a monthly basis. So that's where we are. Last thing, and why is this significant for precious metals? Well, let's look at how precious metals performed when we got these signals. Great Depression here. S&P, after the market peaks, we can see this is gold stocks here. Not a huge index. This is, probably only a handful of the biggest mining companies. But after the secular turning point, huge move in the gold stocks. I'll come back to this in a second. Then you have this here. So again, this is the S&P. I should have mentioned this. I'm sorry. So this is the S&P divided by gold, the same chart that we've been looking at. And the vertical lines here, they mark when this ratio lost the 40-month moving average. So we can see here, this is when it lost the 40-month moving average. This is when it lost the 40-month moving average. So this is where we are here and now. It lost the 40-month moving average. But look at gold, silver here, and the Barron's Gold Mining Index gold stocks. So look what happened after this last signal. Look at the secular move that you had in precious metals. And so this one here, so remember, we were on the gold standard until 71. I mean, you still had this signal, but look how gold performed after the signal, silver and the gold stocks. But the reality is, based on the comparison, gold today with the gold stocks in the mid to late 60s, I mean, this is really a better comparison for where we are now. Like this than this point. And so this was after the Barron's Gold Mining Index broke out of a 28-year long base. It was like a year, maybe a little bit more after it broke out of that base. So that's just my main point here is this is so significant. This ratio losing the moving average here, here, here. We can see the performance in precious metals after. And that with respect to gold stocks, I think this is I think we're here rather than here, to use a historic analogy. So that's all for the video. Let me know what you think. Hope you guys had a great weekend, and hope you have a good weekend ahead. Again, leave a comment, and I'll talk to you guys again in the next video. Thanks for tuning in.